Hello, you're with India Post Live, India's first live interactive news conversation web TV. It's interesting, you can also participate and give in your comments and feedback on the shows that we have. And if at all you want to exercise your political brawn and your mental muscles, you can participate in our one-of-its-kind interactive Vote Your Neta, the vote race. You can actually participate and use the Namo, Raga and AK49. You can join into the India Post Live website and drive your Neta to the finish line. So it's a very unique and one of its kind online interactive game on our website. Do check it out and let us know how far you're able to take your Neta. On another note, today we'll be discussing how the Sensex and the Nifty have reached record highs of at least 22,000 in the third consecutive day. What actually made the gain of the indices and who are the top gainers? We will discuss this in further. We have in the studio Mr. Shishir Sinha, Senior Assistant Editor at the Hindu Business Line. We will also have prominent guests joining us on Google Hangout and Skype. But before that, take a look on what actually made the Sensex reach a record highs today. It is of course closed trading in Mumbai because Mumbai will be going to polls today. But who are the top gainers? Let's find out. The BSE Sensex closed at a record high of 22,876 on Wednesday, driven by gains in blue chip stocks. Indices such as those of capital goods, BankX, metal and healthcare triggered the rise in the Bombay benchmark index. The Sensex gained 0.52% to close at 22,876.54. Earlier in the day, it had risen to as much as 0.63% to record a high of 22,912.52. Nifty closed at 0.37% higher at 6,840.80 after gaining as much as 0.68% to hit a life high of 6,861.60. Lenders too gained substantially on hopes that the worst may be over. Leading the pack was Yes Bank, which rose 1.67% after it reported a 19% rise in its Q4 profit.
Yes Bank.
The Mangalore refinery stock was the top gainer with a rise of 16.17% on the back of reports that Deepak Fertilizers and Petrochemicals had announced an open offer to buy 26% stake from the public shareholders of the company. So what is in store? Will the markets continue to see new highs? Thank you, Mr. Sinha. We will appreciate all your perspective on trying to find out what could have possibly helped in the record highs, and will we see this momentum in the next couple of weeks as well?
See, market has its own logic. There is no fundamental. It always runs on expectation. It always runs on apprehension. Now, what is the expectation? Expectation is that we will have a stable government after 16th May. So, people are coming, putting money. But mind it, there are only big investors coming, not the retail investors. Now, why FIIs are coming? You won't believe, just in the first 4 months of this calendar year, almost 30,000 crore of net inflow in our market. That's a very big amount. And people are putting money like anything. Why? Because China is expecting some kind of slowdown. In other emerging markets like Brazil or Indonesia, we are not seeing some kind of growth. So the only hope is India. The valuations are low. They are finding the stocks are very attractive, so they are putting money. But if we do not have a stable government after 16th May, then what will happen? We may jump into a kind of disaster because people will start withdrawing money like anything. Last 4 years, you haven't seen any kind of fundamental change. In fact, it has gone worst. This year, if we talk about 2013-14, previous fiscal, annual growth rate was much below expectation. It was something around 4.9%. We were expecting some kind of 8% or 9%, but the actual growth rate was 4.9%. This year, what we are expecting? We are expecting that we will have a growth rate of at least 5.5% to 6%. So there will be some improvement. And the other thing is that last 1 year, last 1.5 years, UPA2 has done something which will give result in next 2 years. So even this year, the new government will have just 2 quarters or not, less than 2.5 quarters to work. But Because of the fundamentals, because of the some work they have done in last 1 year or last 1.5 year, we will see good result on economic front.
But do you feel that there is also a Modi effect? There seem to be a lot of intraday traders who are heavily trying to trade in the short-term gain kind of stocks. So do you feel there is some kind of a Modi-led government kind of expectation or speculation that is also driving these gains?
See, there are three political players in this system. One we have UPA, another one is NDA, third one is the third front. Now there are two possibility only. One is Modi government will come. Another possibility that if there is no Modi government, then we will have a third front supported by Congress. Third front supported by Congress, market will not like it. Market will appreciate only if Modi government is there, because they feel that it is something, it is a kind of government which will support economic policy, which will support good economic policy. They have an example of Gujarat. They have an example of almost last 10 years, last 12 years of Modi governance. So they know that this government can work and this government is a business friendly. So people are just going for that expectation. But my fear is that if it doesn't happen, then there will be catastrophe. There will be a disaster and the market will go down like anything. So we should not just joy over the market is reaching at 22,800, 22,900 or 6,800 of Nifty. We should also think of that situation if there is a third front government like we had earlier. I mean, twice we have seen that experience. One was Janata Party government, and then in 98, 99 when the government was just for the 13 months. So we have seen those situations.
Right.
We should be ready for that. But we are just hoping that things will not go that bad. Why we are not thinking like that? Because there is a possibility that because of, as I mentioned, because of the last 1.5 year of some kind of policy action, we will have good performance on economic front this year. The only worry is El Nino effect.
But would you give any kind of credit to, to Chidambaram and his kind of policies? He seems to feel that it isn't really the speculation of a new stable government or a change of guard in governance in India that is driving these, these kind of highs. There are certain measures that their government, the UPA too, has also taken that could possibly having an effect now. Would you give any sort of
Yes.
credit to that?
You have to remember just one date. That date was 25th September 2012. Between 22nd May 2009 and 25th September 2012, the government was doing nothing. All of a sudden, on 25th September 2012, there were almost 39 decisions in Cabinet and Cabinet Committee on Economic Affairs. And from that date onwards, we have seen a number of policy action. So definitely, Chidambaram can say that we have done something that will give result. We have seen that during that NDA and UPA transformation. Before 2004, between 99 and 2004, the NDA government took number of measures and UPA 1 got the result.
Benefited from.
Benefit of that. UPA 2 didn't do anything. Now the last 1.5 year will give result to any new government. So even this new government is not doing anything for first year or for first 1.5 year, they will get good result.
And do you feel the Nifty reaching 6,800 is its ceiling? It's at its peak now. It can't go any further. That is why a lot of analysts like yourself would try and make people cautious who are looking at investing in terms of higher amounts.
See, Indian market is one thing where we do not have retail investor. We do not have a small investor. It's a basically institutional driven. It is basically FIA driven. So all the FIIs, all the institutions, whenever they will see some opportunity to book profit, they will do so. And please remember 6,800, 6,900. I have also seen the days when the Nifty was on 2,000. I have also seen the days when Nifty was 2,500. Then people were saying that it won't go beyond 3,000. When it exceeded, when it touched 3,000, then they said it won't go 3,200. When it got to 3,200, then they said it won't go beyond 4,000.
Right.
So there is no limit. Virtually there is no limit because people can put money like anything. The only thing is that when people start taking out money, then what will happen? There is no upward ceiling, there is no downward.
And do you think that the worst is over now? We saw the markets last week going in the red, plunging a lot in terms of when the, fourth quarter results of many companies were announced. But we will see more company announcements and the results coming out in the weeks ahead. So do you feel the worst is over for the markets?
I feel that the worst is over. There are two positive developments. One is the corporate results are very good. But you will also have to remember banking results are yet to come except Yes Bank.
Yes.
Yes Bank is a very small bank. We will have to wait for 27 nationalized bank. What kind of NPA they will have, what kind of profitability they will have. And then we will see that the financial sector whether they are doing well or not. The other thing is that last year monsoon was good, so we had good kharif crop. Now the problem is this year because of the
Untimely
unusual movement of monsoon, Rabi crop is getting affected. And if Rabi crop is getting affected, and we have also some prediction, one from Australian and one from other agency, they are saying that it will be below average. It will be, something like below 95% of normal average. If we will have that kind of situation, then the kharif crop will affect it. This year, if we have agriculture production of 4%, next year we will not have that kind of production if this situation continues. Then what will happen? So that is why I am saying that we should be very cautious in analyzing all those things. We should not just think on what is good happening, how the Sensex is moving, how the Nifty is moving. And the other thing which is very critical, that not the Aam Aadmi is getting benefit. I am not talking about Aam Aadmi of Aam Aadmi party. I am talking about the retail investor.
Right.
They are not getting benefit. And now just one IPO which is still on. That of one company, is subscribed by almost 38 times. Last time we have seen that situation in Punjab and Sindh Bank when the IPO was subscribed by 50 times. That means people are willing to put their money. They have surplus money. They are just looking for opportunity. It's our duty to advise them that where they should put money and how they should be cautious in putting money.
So good quality stocks is something you would tell retail investors to invest in the weeks ahead?
Of course, because see, today you have an option of buying just one share.
Yes.
You don't have to go for say 50 shares or 100 shares like something like. Except IPO or other thing, there are some limitations. But when you go to secondary market, you can buy one share, you can buy 1 lakh shares. It depends upon your pocket.
Right.
So you will have to select those companies which are really good and which have good potential. For retail investor, I personally feel that defensive stock like FMCG stocks, they are the good stocks. Whether it is a recession, whether it is a boom time, people will not stop using oil and shampoo or soaps or salt. They will continue to use that.
Yes.
So for a retail investor, they should go for FMCG
FMCG.
company.
Great.
They should go for the infra stock where the possibility is very high. They should not go for very volatile kind of stock. They should not go for IT stock because when the rupee will go down, IT companies will suffer.
What about gold and silver investments? Do you suggest retail investors, because gold has been volatile whereas silver has had a sustained good performance, so to say?
Now let me just ask one question from you. Do you buy gold?
Yes, whenever.
In what form?
In terms of gold certificate or actually buying jewelry?
You buy jewelry. You don't buy gold bullion.
Right.
For an investment point of view, you should put money in gold bullion, not in gold jewelry. Right. Because when you go and return or when you want to resell your gold jewelry, the jewelers will cut the making charge and other things. So actually if you have invested, if you have put money something like 40,000 or 50,000, actually you will get not more than 30,000. But when you buy gold coin, when you buy gold biscuit, there is a good chance that you will get, if you have invested say 30,000 rupees or 35,000 rupees, there is a possibility of getting 45,000 rupees. So in India, when we talk about gold or silver investment, we always think about putting money in jewelry. That's not the investment.
Right.
The investment is when you put money in bullion. Bullion means gold coin, gold biscuit.
Yes.
And always go for the hallmark thing, always go for the branded gold biscuit or a gold coin. That will give you the return.
And which kind of infrastructure stocks that you were saying could retail investors actually bank on? Do you feel that smaller companies or like the L&T infra stocks that have really performed very well this quarter and they have gained a lot. Would you suggest larger, bigger companies, infra stocks, or would you look at medium and small sized companies?
Okay. Unfortunately, I will not be able to discuss any specific company because of
Right.
our company policy.
Yes.
But I can tell you the overall picture. When you go for the mid cap or the small cap, the gain is always very small or the
Correct.
medium size. So I would prefer large companies. There is a, if you, even if you are buying 2 stocks or 5 stocks or 10 stocks, gain will be much larger. I can tell you example of one particular IT company. Somebody bought 10, just 10 of that. The selling price was 3,000 rupees. Now it is at something around 4,500 rupees. So even on 10 stocks, you are getting something like 15,000 rupees or something like substantial gain. So you should go for the large cap, buy in a small quantity, and whenever the market is down, go and average it.
Yes.
So your the actual cost of acquisition will come down. Now in stock, just like mutual fund, we also have systematic investment plan where you can have money, say in month of February, if you have money in the month of August, if you have money in month of September, you can just put there. You don't have to wait for, say, when the market will actually go down.
Yes.
Whenever you have money, you can put, you can invest in that, and your cost of acquisition of the overall portfolio will come down.
Great. On that note, also, was hoping that we could talk about how the performance of the markets were boosted by the data that foreign funds, like you said, FIIs are also the continue to be the net buyers of Indian stocks. How far will we see this rally continuing? Do you feel that once the election results are out, there will be some sort of major changes in the FIIs investments?
It depends upon two things. One is that how the situation will be in emerging economies, like in China, like in Indonesia, like in Brazil, or even in some Southeast Asian countries. What kind of economic situations will be there? The second thing is that who is going to hold the finance ministry portfolio? That will also be very critical because it depends upon individual also. One individual is very vocal about liberalizing everything. For the FII, there are two key issues. One is that whether the government is really willing to roll back the retrospective tax amendment or not. If the new government, because they have budget, full-fledged budget in the month of July, if they just go and amend the 2009 finance bill and roll back the retrospective tax amendment, trust me, by Diwali you will see Sensex like something around 26,000 or 27,000 and Nifty at say 7,500 or 7,800. But if the government doesn't do so in this budget, there will be hope. So by Diwali you will have Sensex like something around 24,000 or 24,500, and they will wait for the next budget that will be presented in 2015 February, and then they will accordingly plan their thing. So currently I believe that FII will continue to invest because of the lower valuation, because of the situation in other emerging market, and because of the better valuation. And the most critical is that expectation is very high. They are hoping that there will be some more policy measures. The only hitch they have is FDI and multi-brand retail. But I don't think that is something going to deter the FII not to put money in Indian market. That's a very small portion, because how many FII, how many multi-brand retail foreign players have come in our country? Just you have Tesco, who is trying to put application
IKEA,
into that. IKEA is there. IKEA is basically single brand retail. It's not multi-brand retail. So they are putting money. They are coming money. For FIA, this is a very small issue. But still, this is some kind of say sentiment booster kind of thing. But if you go and amend the insurance rule and increase FII, increase the FDI limit from 26% to 49%, that will be the big booster for the market. So currently, my hope is that FII will continue to put money at least till Diwali, and they will wait for the last quarter of the fiscal. They will wait for what kind of policy direction the new government is taking, and then accordingly they will make a plan.
Sir, again, if we come back to the retail investors, since we want to encourage a lot of retail investors to try and trade in, but look at the large cap or the mid cap stocks, what would you say in terms of, like you said, about systematic investment plan? What would you say about mutual fund investments? Is it really taking off? Is there a trend that we are seeing among retail investors who heavily depend on, whenever they have a surplus of income, they try and look at mutual funds, and also in terms of tax rebate?
Definitely. See, for retail investor, there are three a good option for them. One is Rajiv Gandhi Equity Saving Schemes, where they can, if they are the first time investor, and the 25,000 at the best, at the maximum 25,000 rupees, 25,000 will be deducted from their total income, whatsoever amount they invest in the market. Maximum amount deduction available is rupees 25,000. So one is Rajiv Gandhi Equity Saving Scheme. Then if they are looking for some kind of another tax break, then they go for equity linked saving schemes.
Right.
That's a mutual ELSS. There they can, the only issue is that there is a 3-year lock-in.
Yes.
So they can go, but even 3-year lock-in is nothing, because it's a equity link. So you will have better return than NSC or any post office saving schemes. Like NSC or post office saving schemes have a return of on an average of 8.16%, 8.2%. But if we talk about equity, the average return has been something around 15% or 18%.
Right.
So there would be the good option. And the third thing is that if they do not want to take any risk, they should go for the tax saving bank fixed deposit.
Right.
That's the lock-in is the 5-year. So they can go there if they don't want to take any risk. But for a retail investor, putting money directly into equity market is not a good idea.
Right.
They should go and adopt the mutual fund route.
Okay, so on that note, we will try and get in viewers to give their feedback. You can write in to our website at indiapostlive.com and our Twitter handle @IndiaPostLive, and you can put in your comments and views on what you think that our analysts are guiding you and recommending a particular kind of investment brackets, a particular kind of investment formats. Do put in your comments and feedback. We want to hear from you. Your voice is our voice, and indiapostlive.com really expects and encourages feedback. We will try and get in more analysts and financial experts to guide you on what is in store ahead. But for now, we'll end it on this note that, be cautious, because these are gains. You will see the markets going on a high based on speculations and also expectations from the new government that will come to power in May. But we are hoping that the worst is over for the Sensex and the Nifty. It remains close today as Mumbai goes out to vote. Let's hope there is a better turnout this time in terms of polling in the financial capital of the country. Look out for good quality stocks is what Mr. Sinha here is advising and recommending. So keep the money locked in the right investments, and do keep watching India Post Live. Thank you so much. Thank you, Mr. Sinha, for joining us with your perspective and advice. Two guests.